Good evening. Ira Epstein with your metal market wrap-up, and this wrap-up is for Monday. And we're sitting here now on the 14th of August, 2023, 5:40 p.m. Central Time. We're in quieter markets. I know you see that. The volume is not what it normally is. The action, we're compressing a lot of the different trading ranges. And this is very typical as you get into the end of August. A lot of traders are away. They're taking their final vacations. In many areas, I have a niece that went back to high school today. So you figure that out. So these things are going on. Got another nephew that's leaving for college next week. So the kids are going away. Other families just finishing things up. I have people that I send emails to, and I'm getting emails back from them. I'll be back in a week, things of that nature. Deal with it. Over the weekend, we did not see anything positive come out of China. We saw the problems continue, not only in their property sector, but now the private sector, what they call shadow banking. And one of the firms that has a division with $136 billion, they're missing payments now on some of the debt that they have. So things are going from bad to worse over there. They're not getting much business. Deflation has hit them. I did a piece today for the CME group in Bloomberg on that, and it's already published on the TikTok board, as they call it. And it's very fascinating what's going on. You would think lower prices spur demand. That's not how it is in certain phases of a cycle. At this phase, lower prices scare off the manufacturers. They keep the youth unemployment over 21%. They don't buy as much. They don't want to inventory. They can't seem to get and find what they've got to do to get the consumer back to buying. And all this has to come together with China itself, there at least, doing something to spur on the economy. We're different here. Our big thing is the service sector, which is on fire. But if you look everywhere else, not so much so. Now, we're going to get all the retailers this week starting the report. I'm going to tonight cover, if you do the SPDR ETFs, we're going to cover Target, because that's probably the most vulnerable of the big retailers. So I figured I might as well approach that one. All right. Let's go to the charts. First, you're staying underneath the 18-week moving average closes, as far as I am concerned. That's a big, important thing. It keeps the bias of the market down. Second, look how the market just keeps leaking down. Now, you'll notice as it's falling, the ranges are getting tighter and tighter. That is something to always pay attention to. You've got lower highs, lower lows, a pretty big break. Is the 18-day average of closes in red going to be able to get underneath the 200-day? That would be another bearish crossover in the market. You had one over here where the 18 got underneath the 100. You had a break, then you went up and challenged that average, and now you've come down. And frankly, now you've got a week underneath that 200-day. It's certainly not acting like the market got under it and wants to snap back right to it. Not acting at all like that. What else? We get that trade that I call the gorilla glue trade. It's when a market locks in on the lower Bollinger Band and just can't get away from it. Most people go, oh, it's oversold, I got to buy it. And where do you put your stop if you're buying it? It makes no sense. The trend is down. The bias is down. Why do people try to be heroes? It's beyond me. In addition, you have an embedded reading. I'm looking for the first good rally off of that so I can tell traders to go short, not long. And I know you'll say, oh, you're going to sell right at the bottom. We'll see. When you embed, you have a tendency to keep going down until that red line closes over 21. In the gold-silver ratio, pretty soon I'll be leaving, by the way, the August gold, but you don't do it quite yet. It's not backing off at all, my friends. It is just staying here. It got up to the 84 level, and it's staying right there, which means silver is still pretty darn weak. It, too, is getting a bounce, but there's something else happening. Look at how the 18-day average is getting now within spitting distance of the 200-day average. You're probably going to have one of these times a crossover. We'll see if the market makes new lows off of it. I would certainly tell you I don't want to be short anymore, only when the red line closes over 21. But until then, you wake up one of these mornings, you get a nice rally. Generally, you sell into that until the red line closes over that 21 level. In the copper market, not quite the same. Oversold, period. pushing on the lower Bollinger Band. No reason to be a buyer. We're still waiting to see when economies, I'm not just talking China, economies want to pick up overall. And in the platinum market, well, are we going to get a settlement over 21? Did it embed? So we can come back here. You can't count Tuesday because we don't know where Tuesday is going to close. But I think you'd agree, both numbers on Monday, today we're under 20, but not the day before. So you've always got to look and see just how did that finish up and what do you do with it. So I'm watching this market, not that much enamored with it. And in the dollar, this is where I think the pros are going to take some money off the table. Now, I know some of you will say, okay, now you're wrong, it's going to keep going. Guess what? It could. You have an embedded reading. But I said some money. I didn't say they're going to come out. I'll often say that's what I think. The pros are coming out. I think they're taking some position off here because you are embedded. Until that's lost, you get up to these numbers, you back off, and there's a way that the pros step in and try to buy on the break. I'll be one of those trying probably tonight to do that if certain things happen, telling my clients at least that I want them to do that. Now remember, strategies are what trading is about. We have an interesting brochure, if you will, and it's called Profitable Trading Strategies in Any Market. And it really covers a whole slew of things for you. Number one, the basics. They're so darn important. In other words, what are they? Then, how to trade. How do you look at a flat base pattern? I take that into account when I tell you, hey, the Bollinger Bands are narrowing in. Look at this pattern that's happening. You want to run away from that. It's another variation of it. How do you work with it? What do the chart patterns look like? Well, I've taken that to other levels for you. But this is a lot of this, what I was involved in trying to show you how to work with that. So what do you do and how do you get all this? Just move your cursor to the top if you're on a PC, and you'll see an icon, give it a click. If you're not, go to iraepstein.com, and where it says free offers on the top left, give that a click. And if you have other questions, call my staff. I'm Ira. I'll see you tomorrow. Have a great evening. Take care.